In this video, I'm going to look at New Zealand dollar versus the US dollar. Um, and in specific, I'm going to look at these three trading weeks right here. So this is 1, 2, and 3. I'm going to look at, I'm using the volume profile tool to help me determine trade entry levels. So the live and developing volume profile will have limited value. And the earlier it is in the profile time period, the lesser of an impact it will have. So ideally, I want to look at the previous period's volume profile to guide me, to give me direction in which way price wants to go. So as always, I'm looking to buy low, sell high. So I'm going to use the profile to define what is high and what is low. So if I was looking to trade in this week here, I would be using the profile from this week here. I'm going to be using the previous week's profile. Which is inside of the rectangular box. Inside of this rectangle, this blue rectangle. So looking at this blue rectangle at the close of the week for this trading week here, I will see a low volume profile, a low volume node right here. Above it, we've got a bell-shaped distribution. Below it, we have another bell-shaped distribution. The week closed here. The week close was right there. So I am now above this low, the low volume point. And I'm going to then define this low volume point as a low. So the red line is a low, and I'm looking to be a buyer off of the red line, and I'm looking for price to move up. And up to where? Up to I'm looking for price to move from this low back up to the high. From this volume profile, from this profile low, I'm gonna call this. This is a profile low. So therefore, I want to buy here when price above. Buy here. I want to buy. Then below it, profile high, and I want to sell here. All right, so let me talk about what that means. I want to buy low and sell high. So when price is, I want to buy low and sell high. And when price, wherever price is at that given moment, at the close of this week here, this is the information that I have. This entire week opened at 67.94. Then the week closed. Then we traded around it. We came down, and the low for the week is down here, 66.19. And the high for the week, 68.15. at the close of the week, I have the following information. I know where the week's high is. I know where the week's low is. I know where the value area is, and that's the shaded gray area. And I know where I could see on this volume profile that there's two distributions. There's two bell curves. We have one above the red line, and we have one below the red line. At the close of the week, I'm above the red line. Price is above the red line. It closes above the red line. So coming into the new week, I'm looking to be a buyer as close to this red line as possible. This red line, I'm using the red line, which is a low as defined by this is a profile low. It's defined for me. It's a profile low. It is defined for me. It's a profile low. So that profile low, price is above it. Therefore, I want to buy as close to it as possible. I want to be a buyer inside I want to buy. We're going to make this blue. I want to buy inside of the blue rectangle. Why do I want to buy inside of the blue rectangle? Because the blue rectangle area, I am defining that as a volume profile low. I want to buy at volume profile lows. So when I say I want to buy low, sell high, I need to define a low and a high. How to define high and low? Well, I'm going to use the volume profile to define high and lows. And then from these defined highs, I want to sell at as close to it as possible. And then from these, and then I want to buy at the volume profile lows as close as possible. So what does this all mean? It means that when I when I am researching for trade, I need to begin with identifying profile highs and lows. When researching for trades, I come to the computer and what do? So I'll do it this way here. This is the 1 hour chart for New Zealand dollar, and it's showing the daily profiles. So armed with this information, okay, I come to the computer, I turn on the charts, and I'm here, and wow, what do? There's lots of things. I could draw circles, I can draw lines, I can put in horizontal lines. I can say here's a high, and here's a low, and so when price comes up to this high, I want to sell. When price comes down to this low, I want to buy, and so on. That's all fine and good, but is it the optimal way? It can work, yes, but is it the optimal way? And I have this tool, volume profile, that I like a lot and I think is very reliable. So what I do is I come to the monitor, I come to the screen, and I say, what am I going to sit here and do? My first task, identify volume profile highs and lows. So let's do that. All right, so I come to the computer, and let's say I come to the computer on this day here, on this trading day, which is the Friday's trading day. So I've got this information. I'm going to be looking at information that is already developed. It's fully developed. I'm not going to be looking at the live. So identify first, identify volume profile highs and lows using only previous periods completed profile. Right? I'm not going to be using the developing profile. The developing profile has limited information. Looking at this completed profile, I need to identify highs and lows because I want to buy at lows and sell at highs. So I identify that this area here is a volume profile low. This is a volume profile low. And the thing about the volume profiles is that it's a low, sorry, the levels is not a specific number. It's a range. So this is a volume profile range. Why do I, whereas if I use horizontal lines to define a high or a low, then I'm gonna go right up to here. And this would be this 68.73, that is a specific point, a specific price level. Whereas when I look at the volume profile high and low, I could see I get a range. And this range happens to be, in this case, a 15 pip range. It's a 15 pip range. So on this Friday trading day, I'm looking for entries to take trades. I look at this profile and I see a low in here, right here in this range. So what it says to me is, as price, if and when price, because it might not happen and I have to wait for it to happen. I want to put myself in optimal positions. So if and when price comes into this range, I want to be a buyer. If and when price comes into this range, I want to be a buyer. Now this is a 1 hour chart. So it comes into it. Draw another circle, another rectangle, and I'm going to talk about now when it actually does come in. And it comes in right there. And I'm going to change this to a different shading. So this is my range. I've identified, I'm doing my homework. I'm doing my homework to prepare to trade on this day here. And I look at the previous day's profile and I say, wow, if and when price gets into this thin volume area, then that's a low that I want to buy. So if I do this, so this will now be ID'd low, buy area, so where does the stop go? And how do I determine the stop? the stop will be if this low cannot hold. Stop is triggered when volume profile low cannot hold, right? In this specific, in this instance, in this case here, and that would mean means to see price accepted in next bell curve, right? In the next accepted value area. And that would be the next accepted value area is in here. And I'm going to make that gray to keep it consistent with this, the defined value area for the entire day. If price broke through this low range and came into here and see acceptance, then as price oscillates in and around this and this area here, I've got to take the trade. I've got to get up. I've got to get out, and I've got to get out, and I've got to get up. I cannot continue to be in that because it's telling me that this volume profile low is not bringing in buyers. So let's see what actually does happen. It comes into it, and I could see, yes, I take a trade there. And I would be panicking for about 10 pips within this 1 hour bar. But when this 1 hour, the following, so I'm going to get in, my entry is on the open. The entry is going to be either as price came into onto this blue line, or on the open of the next bar, and I'm going to be holding tight for 1 hour. The target would be right back up to, well, see, I can't say that right now because this would have been a developing, and I don't know what it would have looked like at 5 o'clock in the morning. The target would be, first sign would be back up to the point of control from the previous volume profile. Right? We know that's where price is comfortable. because that's what it was for the previous day, and we could target up there, and that target would be 29.30 pips or so. This price comes back down into that area here, then I'm then looking to see well, yes. So for it to get up to this high up here, what are the challenges it needs to go through? Well, it needs to get accepted into this. And I would know this now in the following day. So it does it I could see that the reverse happened here. This oh no, not reverse, it's a in this area here, at the close of this day and the open of the next trading day, I will have this completed profile, and it will show me a volume profile high range. And that range is about 9 or 10 pips. So this will now it's all relative to where price is. If price was above here, then this would not be a volume profile high. It would be a volume profile low. But because price is underneath it, it's now a high. It needs to break through this and get accepted into the next for it to continue up. Let me see if I can summarize quickly. At the close of this, the label up here is the label that starts at 5 o'clock. The trading day for Forex starts at 5 o'clock. That's fine. And so the trading day is actually Wednesday, but this started Thursday, but this started on Wednesday. Here we go. At the close of the day, I have this completed volume profile, and price is right there. It closes right there. So now I'm preparing to trade for the next day, and I'm going to identify down this range here as a volume profile low, buy in here. I will be wrong on wrong on buy if price gets accepted into this value area. And I'm just going to identify this is also a value area. And let's look at this properly. And this is another value area here. Value area 2. It doesn't matter which one is 1 or 2, but that's the value area there. And this is value area 1. The 1 and 2 doesn't mean nothing, just a labeling. Price is here on the blue line, and I'm looking for a trade. And I see a volume profile low here, and I say I'm going to wait for price to come into here, and then I'm going to be a buyer. Further on, look at some stuff. I can see that I've got a 100, 200 cross. I don't trade on the cross. It tells me that direction has changed, telling me that we're going to the upside. And we had strong moves up here, up, continue up for this trading day. And so if I'm looking for that pullback to be a buyer, where would that pullback, where would be an ideal place? Well, an ideal place would be at a low, and I use the volume profile to determine that low. Then I've got this. I want to be a buyer in this blue rectangle. So I keep waiting, and I'm waiting, and I'm waiting, and I'm watching price. So I cannot be a seller because I don't have a defined high. A defined high will be where volume is low. So here I have no defined high to place, no defined high for a sell entry. There is no low volume high. I've got a low volume so I've got a thin, what is that called? Volume high. I've got no low volume high. And I've got a low volume low, right? Here. So I have to work with what I have. It'll be hard. See, this, I need to see the tail. No low volume, no low volume tail, high tail, and here I've got a low volume low tail. Got it here. So I keep I'm waiting and I'm waiting. So I don't have a buy here. So my trade is in the blue box, right? It's in the blue box. So I'm looking, let's see here. Did this come into? So now my now my trade area has been triggered. I have waited for price to come to me. I'm not chasing price. Waited for price to come to my level. I'm not chasing price. And then it comes in there, and I don't know how I do it, but somehow inside of this, I'm not going to get into that right now, but my trading range has been activated and I execute a buy. I am now in a buy trade. So I'm going to, just for argument's sake, I'm going to say I bought here. Just leave that there for a second. I am now, I'm here, and buy trade open. So my buy trade is open, and what do I need? I need a target and I need a stop. A target is where I want to take my profits, and a stop is where I need to say I'm wrong. This is not going to hold, and that would be in here. So my stop is now going to be inside of here, and I'm going to make it red. This is where I do not want to continue to be in this trade. Now, I don't want it to be all the way down here. Let me see what level that is. My stop is not going to be 67.57. That's going to be too big. My stop is going to be if I see acceptance into this range. And then I've got to, this is a warning. No, you cannot stay in this trade. You're out. Wrong. Even if it turns around and heads back after you got out, it's telling you that acceptance into this means that it's likely going to come all the way down into this volume area too. So that's where that's my stop. Where is my target? Well, my target is the previous days. Make that orange. Target 1. Right? Target 1 or the full complete thing. I mean, that's something that's not what this video is about. But target is is up to the previous days. Because why this previous days? Because that's the information I'm using to get my entry, and I want to trade back to the point of volume, point of control. So therefore, if I get in here, I'm looking at about a 30 pip, 29 to 30 pip profit. When I take it all out, that's trade management, and that's not what this is about. And so let's see now. The bar that I enter on ends up closing to the upside, and it's showing me that this low volume area has brought in some buying. Following bar is slow. These 3 bars, the 2 bars after my entry bar, I'm looking good. I'm looking good, and it's telling me if I come back into this buy area, and it gets accepted into the buy area, then look for it to rotate into the next area of acceptance. And then on this bar, I get my target is achieved. And the following bar, it comes back down. So here, target achieved, I'm either completely out or partially out, and definitely I should be back to break even. And that's my one trade for the day. That's my one trade for the day. Because I did not have a sell signal up here. Because I did not have a low volume tail. I do not have a sell signal. So I did not sell into this. That's my one trade. I'm back up to this. I do not buy or sell at the volume point of control. I take profits at the volume point of control. And I continue on. And the day closes here. And then I started all over. So there was one trade here. And it was a buy for 30 pips. And then I continue. On the new trading day, I do the same thing. I look at the previous days and identify volume profile lows, volume profile highs, because I want to be a buyer on lows and I want to be a seller on highs. And then I do that and I continue. And this is, I'm going to end this video here, but it's a perfect way to show 1 or 2 trades a day. That's it. 1 or 2 trades a day. That's it.